Stocks rising today, but consumer sentiment slipped for the fourth straight month in November. The University of Michigan survey showed a reading of 60.4. That's lower than the consensus. Let's bring in Will Lansing. He's CEO of FICO. The company reported fourth quarter earnings earlier this week. Will, it's great to have you on the show. Thanks for being here.
Oh, it's great to be here.
Your stock finished today up 3.5% at a fresh 52-week high today. A lot to get to, including what you're seeing with the consumer. But the fact that your business is broken down into two, it's really scores and software revenue. And the fact that you're continuing to grow as strongly as you are got my attention, given the fact that we do have higher interest rates and we do have some signs that credit is tightening here. And yet you're powering along. Why?
Well, both businesses are in great shape. Consumer credit is the foundation of a consumer economy, and our business has really benefited from that. I mean, we're a 68-year-old company, but over the course of that time, our scores have become so deeply embedded in the credit evaluation process for lenders that we're really we're what makes the economy go. And so the scores business is very strong. And then we have a newer business, which is our software business. And that's also booming. That's all about helping B2C companies optimize their interactions with their consumer customers. Both businesses are just on fire.
Yeah. And of course, both businesses, to your point, tie back to the consumer. So what are we seeing cracks in the consumer yet, or is it resilient?
The consumer is pretty resilient. I mean, I guess I would start by saying FICO scores are a lagging indicator. So there are other indicators that would give you a little more of a forward look. What we see is stability around the FICO score. It's around 718 right now, which is up a couple of points over the last few months. But that's a stable score, and the consumer's doing okay. There's a little more debt out there. But we see a pretty stable consumer. What's killing us is interest rates, of course. I mean, that's really decimated the refi market, the mortgage refi market. And it's also a challenge just on new mortgages.
I mean, we've seen that credit scores are at all-time highs. What's been fascinating to me is the fact that during the pandemic, folks were able to pay down some of their debt. They were able to boost their savings. You had stimulus checks coming in, not able to spend as much at the time, maybe strengthen their credit standing, and thus be able to take on larger lines of credit. And now they're starting to spend in this higher inflation environment. It's almost acted, I think, as a second wave of stimulus. Am I right to think about it that way?
Well, I think there's some truth to that. Absolutely. The nice thing is that consumers are increasingly sensitized to how important it is to maintain a good FICO score. And so responsible behavior is now paramount. I mean, consumers really think about the impact of their payment behavior on their credit score and what it means for the price of credit and the availability of credit in the future. So I think they're just a lot more sensitized now than they have been in the past.
So what is higher for longer from the Fed? Because we know that's been the message. What does that mean to this entire picture looking to 2024 and for your business?
When we look at the score side of the business, we see, mortgage volumes are about as low as they've been in decades. And we don't see it coming back very fast. We do see it coming back. I mean, sooner or later, people will be buying houses again. And if we have a 1 or 2 point decrease in mortgage rates, which could be a while in coming, but if we have that, we're going to see the refi market come back too. That could be towards the end of the year. That could be next year. I mean, it could be some time before that comes back.